Please take notes. While trading can be rewarding, it comes with high level of risk and you can lose all your funds. And also note that videos on this channel are for educational purposes only. None is intended as investment advice. Please do your own research and also consult your financial advisor if you need one. Thank you. All right, so the Forex market structure. So we are going to be handling the theoretical aspect of Forex market structure in this lesson. By the time we are done with this, we'll be moving into the charts. And never mind, you are going to get familiar with all of these. And in no time, you'll become an authority yourself. Promise you that. All right, so okay, so quickly let's have an overview of the forex market. The forex market is a decentralized global market where currencies are traded. It operates 24 hours a day, 5 days a week, and it's the largest single financial market in the whole wide world. Should I say on planet Earth? Now, here are the key participants in the forex market. You have central banks who manage national currencies and implement monetary policy. Their actions can significantly influence currency values. Then you have commercial banks who are major players in the forex market because they facilitate currency transactions for clients and also engage in speculative trading. Yes, banks also do engage in speculative trading, your commercial banks. Then you have institutional investors who are like hedge funds, pension funds, and other large entities that trade currencies for investment purposes. Then retail traders. Retail traders are individual traders who participate in the forex market through brokers, often using leverage to amplify their trading position. So you and I, who do not have institutional funds size, who are not commercial banks or central banks, we fall under the category of retail traders. So I'm a retail trader. You will soon join us as retail trader. Okay. The forex market operates in different sessions based on global financial centers. There are 4 financial centers across the globe. You have the Sydney session, the Tokyo session, the London session, and the New York session. The lowest in terms of liquidity is the Sydney session, which opens at 10 p.m. GMT. All right, and it closes around 6 p.m. thereabouts, 6 p.m. Okay, and I'm going to take you through a chart, a live chart, where a live calendar rather, where you see these markets time zones, right? Forex.timezoneconverter.com. We'll check through that in a bit. Okay, so that you see it for yourself. So I would like you to just check it out, even as the video is playing. You can actually check it out. Okay, so when you just plot in forex.timezoneconverter.com, this is what comes up, and you can see forex market hour. So if you scroll down here, you can see this time is in GMT, there time zone GMT. So now let's scroll down here. You can see Sydney, Australia. You can see 10 p.m. Right, that's when it opens and closes 6 a.m. Right, 6 a.m. Then you have the Tokyo, Japan, that opens barely 1 hour after the Sydney opens at 11 p.m. GMT and closes 7 a.m. And now you have the Frankfurt, Germany, which is the Euro um, zone, opening at 6 a.m. to close at 2 p.m. Then London session opens at 7 a.m. to close at 3 p.m. Now, as you can see here, you can see that 2 markets are open at the moment. Okay, so there's an overlap between the 2 markets now, but shortly 3 markets will overlap. That is at 12 p.m. GMT when the New York session will open. Okay, so it will open at 12 p.m. just in less than an hour from now. The New York session opens, and so 3 markets will overlap, and that's when you have the largest liquidity in the market. So you can check that again, forex.timezoneconverter.com. So you can see that's what just they have explained it. All right, so market types. Spot markets is the most common market where currencies are bought and sold for immediate delivery. Prices are determined by current market conditions. That's we do spot trading a lot. We do spot trading a lot. As retail traders, we do spot trading a lot. Forward markets. Here, contracts are made to buy or sell currencies at a future date at a predetermined price. This is often used for hedging purposes. Hedge funds use this a lot. Then you have futures markets, which is similar to the forward market, but this one involves standardized contracts traded on exchanges. Futures contracts have specific expiration dates and are regulated. Especially if you're in the US, you would have heard, or if you've heard about CFTC, that's Commodities Futures Trading Commission. That's the body saddled with the responsibility of regulating futures trading in the United States of America. Now, let's quickly understand leverage. Theoretically, leverage allows traders to control larger positions with smaller amounts of capital. While it can be while it can amplify profits, it also increases the risk of significant losses. Yes, it's essential for traders to understand the risk associated with leverage and to use it responsibly. Now, look at leverage in this regard. You have $100 or $250 or $500 or $1,000 to trade. Do you know that with leverage, you can actually control $100,000 with your $100? How? If you go with 1,000 to 1 leverage, that means 1 to 1,000 leverage. See what it will give you. It means that every $1 you present, you receive $1,000. So now multiply your 1,000 by 100. What do you have? That's 100,000. That's leverage. Now, when you are given leverage, it does not show. You will not see, it's invisible. Say it's an invisible tool to maximize your opportunities. Your $100 remains $100 as you're seeing it, but inside, leverage has been factored in, and you notice it when you place a trade. You get to know more about this by the time we go into the practical section. Summary of this session, lesson 1.3. We've learned that the forex market is a decentralized global market with various participants, including central banks, commercial banks, institutional investors, and retail traders like you and I. You've also learned that the forex market operates 24 hours a day with 4 main trading sessions like Sydney, Tokyo, London, and New York, each contributing to different levels of volatility and liquidity. This is a 5 days market, Monday to Friday. It doesn't trade on Saturday and Sundays. The market consists of different types, including the spot market for immediate transactions, the forward market for future contracts, and futures market for standardized contracts traded in exchanges. And you also learned that leverage is a key feature of forex trading, allowing you as a trader to control larger positions with less capital, but it also increases the risk of significant losses. Let me quickly chip in here. While that your $100 can control 100,000, when notice when you place a trade, remember that 1 to 1,000 leverage. For example, if you take a trade that will give you $10 a pip, what it simply means that if you have 10 pips in your favor, multiply 10 by 10, what do you have? 100. You would have doubled your money in a trade. But guess what? If it goes against you, in fact, as soon as you place a trade, you're already 30 minutes down where the spread is 3 pips for spread. And so just remaining 7 more pips and you're wiped out. If I won't be able to 7 pips and you receive margin call. So if you are using 0.5, where 1 pip is $5, 10 pips will give you $50. 50% of your money is either made or lost already. So you can see the leverage is just not a tool for maximizing profits. It's also a tool that maximizes losses. So you need to use it wisely. All right, so we are going to end this session here, and next we'll be heading over to the next lesson, which will be lesson 2. But before you go, you need to understand that understanding and managing leverage is crucial for your trading success. Understanding and managing leverage is crucial for your trading success or for successful trading. Risk disclosure. Once again, all materials you have been presented with here are strictly for educational purposes. None of them is intended as investment advice. So whatever you put into the market is at your own risk. Be wise. Thank you very much and see you in the next video. Thank you and God bless you.